Brad Williams, Frugal Finance. Let's talk investing. Talk about market cap. Explain. What is market cap? It is the overall value of the company. It's called enterprise value. But what it is, if you take all of the stock outstanding times its current price, indicates the total capitalization of the company. If you're researching stock or stock funds, you'll often see companies categorized by market capitalization. But what is this and why does it matter? Market capitalization, or market cap, is one measure of a company's size. It's the total value of a company's outstanding shares of stock, which include publicly traded shares plus restricted shares held by company officers and insiders. Calculate market cap. You take the total number of company shares outstanding and multiply that by the company's current stock price. For example, if a company has 5 million shares outstanding and its current stock price is 20, it has a market capitalization of 100 million. I'm going to go over to Google. Here are the top companies with a market capitalization. So we have Apple at $3.6 trillion. I remember, probably 4 or 5 years ago, this number was unheard of. The highest market cap I'd seen was in the high nines, and it was Apple. But this 1 trillion number it's just crazy. Then you have NVIDIA, Microsoft, Amazon, Alphabet, Aramco, Meta, Tesla, Berkshire Hathaway, TSMC, Broadcom, so on and so forth. And you can delve into this more if you want. Largest companies by market cap, 10,000 companies, a market cap of $115 trillion. Pretty amazing, yeah? You may hear companies described as large cap, mid cap, or small cap, or even mega cap or micro cap. The delineation between each group can vary, but generally you'll see them broke down like this. Mega cap, market cap value of 200 billion or more. Large cap, market value 10 billion to 200 billion. Mid cap, 2 billion to 10 billion. Small cap, 250 to 2 billion. And micro cap, less than 250 million. So now you're saying, so what, Williams? Who cares? Well, it's sort of indicative of the momentum. We have this herd mentality. If you're a momentum investor, well, you probably focus on the mega caps and the large caps. If you're a value investor, you're looking at mid cap and small caps, trying to find an undervalued opportunity there. Certain stock indexes or investment funds will use this measure to group companies together by size. For example, the S&P 500 is made up of mega cap and large cap stocks and is weighted by market cap. The companies with a higher market cap account for relatively more of the index than companies with a comparatively smaller market cap. Meanwhile, the Russell 2000 index is a small cap market index. Newer investors might mistakenly believe that stock price alone could be a good indicator of how large a company is, but what's most important is determining a company's size is the number of shares outstanding. Take company A and company B, for example. Both have stocks trading at $50 a share, but company A has 5 million shares outstanding and company B has 5 billion shares outstanding. That means company A has a market cap of 250 million, making it a small cap company, whereas company B has a market cap of 250 billion, meaning large cap company, often called mega cap company. Why market cap matters? I could give you my 2 cents worth, but let's see what FINRA says, and then I'll either agree or disagree. For starters, market cap can give you a general idea of where a company stands in the business development process. Is it a relatively new public company, for example? If so, it may have room for growth. After all, access to investor capital to expand the business is why many companies decide to go public in the first place. Market cap can also provide a rough gauge of a company's stability. Large cap companies tend to be less vulnerable to the ups and downs of the market than mid cap companies, and mid cap companies are generally less susceptible to volatility than small cap companies. That's in part because larger companies typically have greater financial reserves and therefore often can absorb losses more easily and bounce back more quickly from a bad year. At the same time, smaller companies might have greater potential for faster growth in economic boom times than larger companies. Think of a cigarette boat versus an oil tanker. You're going to have these VC startup companies that are moving at 9,000 miles an hour, whereas a Walmart is that oil tanker that just plugs along. It gets the job done. It's a mature company. It's predictable, as opposed to these possible fast growth companies. So that is what investors are looking at. Do they want stability? Well-known, well-recognized, well-predictable companies, well-managed, or are they looking for something in the AI sector, for example, that has zero earnings, but has potential to be a mega company in 3 to 4 years? That's why people get into investing. They see upside potential, they see growth, and they see humongous returns. This is why some dividend seekers will use market cap as a filter when looking for companies that pay consistent dividends. These generalizations are no guarantee that any particular large company will weather a downturn or that any particular small cap company will or won't survive. Take, for example, GE. All right, at one point in time in the mid-2000s, they were the glamour stock. They were this conglomerate that was well managed or well manipulated and was the granddaddy of Fortune 500 companies. Later part of 2000, and GE was barely surviving. Now, you got to give credit to the management and the turnaround. But there's a case where you had a mega cap that went into a micro cap, which now is a mid cap. When you diversify, you aim to manage your risk by spreading out your investments. You can diversify by investing among different asset classes, for example, by investing in both stocks and bonds, real estate, gold, crypto, and you can also diversify within asset classes. Investing in small cap and large cap stocks is one example, diversifying within one asset class. I also recommend taking a look, and I have not been successful at this internationally. They say you want to diversify, you want to get a little bit of international exposure. I've lost my butt on international stocks. They've all been well-recognized names. They just haven't performed. Why? I could get into it, but I want to keep this particular video short. The limitations of market cap, something important to keep in mind is that market cap is the perceived value of a company because stock price is determined by investors. It isn't necessarily the actual value of a company and all of its parts. Some of the perceived value may stem from expectations of future growth. Remember I said, you have this momentum, okay? You're going to have all these money managers grouped together and they're going to follow the herd or they're going to create the herd. Whether the value is sensible can be thrown out the window, okay? So that's why you see the top 10 high market cap companies pushing the market higher, whereas 85% of the market is just status quo. That's just the way investing is here in 2025. That's how it's been for the last 4 years. I don't know what the future holds, but you as an investor need to understand that these huge market moved, high cap, mega cap companies, when they tank, they're going to tank big time. So in the end, market cap is just an indicator of the momentum of the portfolio managers and retail investors. You, as a long-term investor, need to recognize that you can hedge against these sudden moves. In other words, you've seen a 25% move in the S&P 500. Is that sustainable? No. Do you want to sell and take a huge tax hit? That's your option. You could also hedge by buying puts. You could also short. You can do a lot of different things if you're concerned about a market being overvalued. But all in all, I think FINRA did a really good job here in presenting what a market cap is. Now, if you are an intrinsic investor, you throw that out and you try to find what the true value is. More to come. Comment. Brad Williams, Frugal Finance. Thanks for watching. Hope that helped. See you soon.